After a week that rattled even the most loyal long-term holders, the stock is now regaining its footing, and doing it in a way that suggests this isn't just a dead cat bounce. This feels like a recalibration after a period of confusion, and for investors who truly understand the company's long-term vision, it's an encouraging sign that the market is starting to realign with the fundamentals. Let's rewind for a moment. Just last Friday, Palantir took a dramatic hit, closing down over 9% in a single trading day. This wasn't just some mild dip, it was a sharp, aggressive sell-off, made even more notable by the fact that the broader market was in rally mode. The S&P 500 and Nasdaq were pushing record highs, but Palantir bucked the trend. The headlines ran wild: concerns over defense spending, insider selling, index volatility. It felt like every possible negative narrative hit at once. A big part of that drop was driven by new defense budget forecasts for 2026, which suggested a potential reduction in future government contract flows. For a company like Palantir, which still relies heavily on US government and military contracts, this kind of news understandably raised some eyebrows. The question that seemed to dominate investor sentiment was this: can Palantir continue to grow if government spending slows down? Fast forward just a few days, and we're now seeing a different picture. Palantir has bounced back more than 6% from those lows. And while short-term price action should never be the sole basis for a thesis, the strength and speed of the recovery tell us something important. The market may have overreacted, and it's now correcting itself as better information and broader context come back into focus. So what's changed? Quite a bit. Let's start with the news flow. While the market was panicking over theoretical declines in defense spending, Palantir was out there doing what it does best: executing. First, the company announced a powerful new partnership with Accenture Federal Services. This isn't just a PR play, this is a strategic alignment with one of the most connected and influential players in the federal space. The goal? To integrate Palantir's AI and data platforms into a broader range of US government agencies to optimize decision-making, resource allocation, and digital transformation. That kind of deal not only reinforces Palantir's place in the federal ecosystem, it actively expands it. And then there's the initiative dubbed Warp Speed for Warships, a collaboration with the Blue Forge Alliance to modernize how the US Navy manufactures and maintains its fleet. This effort leveraged Palantir's Foundry and Apollo platforms to create more efficient and responsive manufacturing pipelines, using real-time data to track components, optimize timelines, and cut costs. It's the kind of high-impact project that shows Palantir isn't just a data analytics company anymore, it's becoming embedded in the infrastructure of national defense operations. Beyond these deals, the company's financial health is giving investors plenty of reasons to stay optimistic. In its most recent earnings report, Palantir delivered a 54% year-over-year increase in earnings and a 3-year average annual earnings growth rate north of 100%. That kind of compounding growth is rare, especially from a company that already has a multi-billion-dollar valuation. It proves Palantir isn't just winning contracts, it's converting those wins into durable profitability. Their operating margins are expanding. Their cash flow is improving. And perhaps most importantly, they're growing without taking on unsustainable debt or relying on excessive dilution. Now, about that insider selling, yes, it's true. CEO Alex Karp has sold a considerable amount of stock in recent months, and other senior executives have done the same. But these were part of pre-scheduled 10b5-1 plans, and it's worth noting that many of these insiders still hold massive stakes in the company. Selling during a rally doesn't necessarily signal a lack of confidence, it's often just part of a larger financial strategy. The media loves to frame insider sales as red flags, but in this case, the underlying fundamentals suggest these sales haven't hurt the business or its growth trajectory in any meaningful way. And speaking of meaningful milestones, Palantir's recent inclusion in the Russell 1000 index is a big deal. That rebalancing process may have added to the volatility we saw last week, but the long-term impact is overwhelmingly positive. Inclusion in a major index like the Russell opens the door to billions in institutional capital. Index funds and ETFs now have a structural reason to hold PLTR shares, which add stability and sustained demand. In the near term, it can cause some mechanical selling or buying, but in the long term, it means more visibility, more volume, and potentially more price support. Then there's the broader AI narrative, and this is where Palantir's long-term value proposition becomes even more compelling. While some companies are still talking about AI as a future opportunity, Palantir is already deploying functional, scalable AI solutions in the real world. Their artificial intelligence platform, or AIP, is being rolled out across enterprises, defense contractors, and government agencies, helping to solve high-stakes problems in real time. From predictive maintenance to battlefield simulation to healthcare logistics, AIP is showing real-world utility, not just PowerPoint potential. That gives Palantir a unique position in the AI investment landscape. It's not a moonshot company anymore. It's a mature, profitable firm with real clients and sticky products. The hype cycle will come and go, but utility, that sticks. So what do we make of all this? To me, the recent sell-off felt like the market tripping over itself, responding emotionally to headlines without taking the time to process the full context. And now, as more clarity emerges and as Palantir continues to land meaningful deals and post strong financials, we're seeing the stock stabilize and recover. I'm not saying the volatility is over. This is Palantir, after all. It's a polarizing company in a highly speculative sector. But what I'm saying is this: for those with a long-term mindset, this recent turbulence looks less like a red flag and more like a healthy shakeout. A moment that filtered out weak hands while reinforcing the conviction of those who truly understand the mission. Palantir is still building, still winning, and still, in my view, significantly undervalued when compared to the scale of what it's trying to achieve. Thanks for listening. If you found this breakdown useful, please consider liking the video, subscribing to the channel, and leaving a comment with your thoughts. Are you adding on the dip, holding your position, or waiting for the dust to fully settle? I'd love to hear your perspective. Until next time, stay sharp, stay patient, and keep your eyes on the long game.